Hello and welcome to the Week in Review, the show that brings you up to date with the week that was. Here are the top stories. WPI and CPI slowed in April, increasing elbow room for RBI to cut rates. S&P maintains negative outlook for India. And the IPL rocked by spot-fixing charges, Sreesanth picked up for questioning. As per data released this week, the Consumer Price Inflation Index and retail price inflation slowed for the second straight month. The CPI index slowed to 9.39% in April. Food prices rose an annual 10.6% in April. Consumer prices had risen an annual 10.3% in March. The wholesale price index slowed in April to 4.89% from 5.96% a month ago. This follows a clear decline in the prices of food and manufactured goods. Food inflation slowed to 6.08%, while manufactured goods inflation decelerated to 3.41%. The export-import numbers were also released last week and pegged the trade deficit at $17.8 billion. Exports grew 1.6% to $24.2 billion in April for the fourth consecutive month, while imports expanded 11% to $41.9 billion, mainly due to a strong demand for gold. Gold and silver imports increased 138% to $7.5 billion. The government has been trying to keep gold imports in check, even as it waits for the economy to pick up. Analysts believe that if inflationary pressures continue to ease, there'd be more room for the RBI to cut rates. Though the economic data is encouraging, the sovereign rating for India remains negative. The S&P affirmed India's rating to BBB- with a negative outlook. It also said there was a 1 in 3 chance of a rating downgrade in the next 12 months. India's long-term growth prospects and its high foreign exchange reserves support the ratings, but large fiscal deficits and debt, as well as low middle-income economy, constrain the ratings, S&P said. There is scope for upgrade if India unleashes public and private investment. Moving on to the shocker of the week, the Indian Premier League has been hit by fresh controversy. On Thursday morning, paceman S. Sreesanth and 2 other Rajasthan Royal players were arrested by Delhi police over spot-fixing charges. The players have been suspended by the BCCI for now. The other 2 players are Ankit Chavan and Ajit Chandela. According to Delhi police investigations, the players received up to 60 lakh rupees for 1 over for giving away runs. At least 14 bookies with underworld connections abroad have been arrested. More arrests were made in Chennai today. Spot fixing refers to fixing a certain limited outcome in a match, such as delivering a no ball or being dismissed in a particular way. Next up is news about Tata Steel. The company said it would take a significant hit on the profit and loss account as it writes off $1.6 billion as impairment charges. The charge is largely related to its European operations, which are still under pressure due to poor economic conditions in the Eurozone. Impairment is the term used for writing off goodwill after a drop in the market value of its acquisition. The decision will amplify the buzz about Tata Steel selling off at least some of its European operations, which came in with its acquisition of the Chorus Group for $11.3 billion in 2007. And now for some stories in brief. In a much-awaited announcement, AirAsia finally named the CEO for its India venture. Singapore-based management consultant Mithu Chandilya will be the CEO of AirAsia India, the joint venture between AirAsia BHD and the Tata Group. The announcement was made by AirAsia founder Tony Fernandes via Twitter, breaking 2 months of silence. The 32-year-old Chandilya was previously head of service practice for Egon Zehnder International. Last month, the government had cleared AirAsia's 80 crore rupees investment proposal. Moving on, cigarette major ITC recorded a 19% increase in net profit for the quarter ending March, meeting market expectations. The net profit for the March quarter stood at 1,927 crore rupees, while the revenue grew 18% to 8,257 crore rupees. The company said its non-cigarettes business had broken even in the fourth quarter of the fiscal 2013. The company's shares were down 0.6% to close at 334 rupees. JM Financial said it would nominate former Citigroup CEO Vikram Pandit as a non-executive chairman of its proposed new entity in the banking space. Pandit and his business partner Hari Iyer are also making a strategic investment by taking a 3% equity stake in JM Financial. They will have the rights to buy shares up to the prescribed RBI limit. JM Financial said its board had decided to apply for a banking license. And that's all we have for you. Thanks for watching.